Fintech Chatter. Brought to you by Tier 1 People, leaders in Fintech executive search. Hello and welcome to Fintech Chatter, the show where I connect with fintech leaders for a bit of a chat. I'm your host, Dexter Cousins, and in today's show, I'm joined by Nima Karimi of Lendela. He's been shaking up the personal loan space, hails from Sweden, and was inspired by the Nordic loans matching model. Nima has set his sights to transform personal lending in Asia Pacific. With that, Lendela was born as Southeast Asia's first reverse auction lending platform in 2018. Lendela's goal is simple: to connect consumers and the best loan providers with greater transparency and choice. Nima has taken Lendela through continuous growth in Singapore, Hong Kong, and now Australia. And he joins me today to talk about their launch and plans for the region. Nima, welcome to the show.
Well, thanks for having me, Dexter.
It's great to have you here in Australia. Welcome.
It's great to be here.
First of all, just for our kind of listeners, Nima, you and I connected in person in Singapore, and you kindly took me for a walk around the the shopping malls there because it was so hot outside.
Which is what you do in Singapore, yeah.
So hopefully I might get the opportunity to return the favor and take you for a walk around our beautiful harbour on this fresh autumn morning.
I would love that. Thank you.
Yeah. Great to have you with us. We've talked about you being on the show for well over 6 months now. I think the reason for that was that we, just really connected over what you're doing with Lendela, could see the huge opportunity and the approach that you'd taken was something a bit different. And, something that I've kind of talked about on the show over the last 3 years, specifically with CDO and open banking, as to how we, need to move away from this kind of, aggregator platform and, these comparison sites to actually use people's data. And so when we connected, it was almost like music in my ears to hear what you were doing with Lendela. But before we kind of go full into it, do you want to maybe tell our listeners a little bit about what you do?
Yeah, sure. In a way, we say we level up the playing field in the lending industry, and we target mainly the personal loan industry. I would say it's common knowledge that in the lending industry, in the consumer lending industry specifically, there's a lack of transparency on both sides for the consumers and for the lenders. If you are a lender and you need to acquire customers, it's quite cumbersome to go and find the right customers. There's a lot of drop-offs in the process, rejections, drop-offs. There's a lot of paperwork or documents or submitting documents, which leads to high customer acquisition costs. And then there's a mismatch as well. You get customers that might not be a fit for you, your profile. But then you look at the consumer side, and you would almost say that the game is rigged against you. As a consumer, if you actually want to do the right thing, which is to compare loans, you're actually, first of all, you have to go through multiple websites, multiple application forms. But also, as you do that, you're hurting your own credit rating. Every time you're applying for a loan, it's affecting your credit rating. It's recorded on your credit report, which is not unique to Australia. It's very common in the markets I come from as well. So we fix this with our reverse auction model. So our platform is built in a way that customers come to our website. They fill out one application form on our website. We run through our matchmaking engine, and we match the customer to the right lender. And those lenders now get to give offers back to our platform. That's the reverse auction. Yeah. So these offers are presented on Lendela's platform, and now the borrower can compare between multiple offers based on just for submitting one application. Mm-hmm. So we're a customer acquisition platform for lenders, and we're solving the transparency for borrowers.
Awesome. So you, as I mentioned, you're based in Singapore. What attracted you to Australia?
Many things. I come from the Nordic markets. I'm originally from Sweden, and I did this business in Sweden for many years. It's quite a mature industry, and I wanted to bring this to other markets, and I ended up in Singapore for a variety of reasons. That's a story for another day. And when we set up shop in Singapore and eventually Hong Kong, which was our second market, we understood that what we were doing in the Nordics would not be a perfect fit. We had to basically what we call localize the product. Yeah. We had to redo most of it to make it work for a variety of reasons. When I came to Australia, I could see that we can actually do a copy paste of our Nordic business model. So why is that? multiple factors. One, regulatory. Here we have the regulatory support put in place to allow for digital solutions like ours. We have open banking. We have credit bureau data accessible by us as a third party, which is not the case in Singapore, Hong Kong. We have lenders being highly advanced and sometimes digitally native or digitally adopted already. We would call them fintech lenders. They have APIs, which again, we didn't have in Singapore, Hong Kong. We have consumers highly adopting technology, very comfortable using online services, very comfortable using open banking or credit data. So all these are like a perfect storm of when our model really thrives. On top of that, there's obviously a huge demand for loans in Australia. It's a country that about, I think, 8 million Australians take a loan every year, or a personal loan if you include BNPL. And it shows me that there is a need for our product. There is a demand for it, but there's a lack of transparency.
Yeah. I think it's 3 years ago next month, actually, that we launched CDR here in Australia, which is our kind of version of open banking. How much did that play on the decision to look at Australia as well?
Honestly, not that much. It told me something about, again, the adoption of technology, the open-mindedness to these kind of solutions. But if you look at lenders, they've been using solutions like open banking for long before CDR, right? So we look at that and we see what are lenders doing even before CDR. Have they adopted this mindset of using transaction data in this case? So CDR just shows me that it's being widely adopted, and there's an openness from all aspects of government and population that we want to move in this direction, which is good.
And kind of the origins of the Lendela business, what prompted you to start the business?
So it wasn't my idea. I was working in insurance for many years, and then I got hired by a company that was doing this model in the Nordics. I went there to launch insurance for them, and by doing so, I fell in love with their core business, which was this reverse auction loan comparison. So in the Nordics, this is quite a mature industry. There's multiple players doing this. These are not considered startups anymore. I worked for the two biggest ones. And what I really loved about the model is that it's a true win-win model, or win-win-win if you want to put it like that, which is lenders are really being enabled. If you're a good lender, you're good at pricing customers, underwriting customers. You get a chance to put an offer in front of those customers thanks to our model, which you wouldn't have been able to do without substantial branding efforts or marketing efforts. Yeah. So you get access to exactly the customers that are a fit for you. And of course, we work on a success-based commission, so you actually get access, and we don't having to pay unless we succeed in what we do. But on the other hand, consumers are getting that much-needed transparency. And in the personal lending space, consumers are very much exposed. There is a lack of information. There is a lack of transparency. It's quite a lonely experience. There could be stigma around it. It's not something you just share with your friends. I need to know, how do I do this? So it's quite a stressful experience to go through. And I got to experience that in the early days in Sweden when we moved there from Iran, my home country, and my parents needed a loan, and I could see what they went through and how exposed they were and what kind of interest rates they ended up paying, actually.
One of the challenges that you have here in Oz as well is that every time you apply for a loan, it goes on your credit report. I'm assuming if I go through Lendela, then there's only one kind of credit check that would get done. Is that a correct assumption?
It's actually 0 credit checks because we do a soft check.
Right.
So that's something we have in Australia. We have access to soft checks in Australia, and we had it in the Nordics as well. But either the customer uploads their credit report in Singapore, Hong Kong, that's what customers do, or in Australia, we're directly integrated with the credit bureau and we do a soft check. So no effect on your credit rating. The act of comparing does not affect your credit rating.
Right.
It's only once you get the loan that it's recorded, right, which is as it should be, of course.
Just before the show, you were telling me that the Lendela platform in Singapore, once you get to the end of it, the customer then has to go into a branch and sign everything. So it's kind of, I'm a massive fan of Singapore. I think they're doing some amazing stuff, but I'm just really surprised to hear about these, what I would have just thought they've got digital ID, they've got everything set up to kind of make this just a seamless experience. How have you overcome those challenges?
So yeah, it's a lot to unpack there. I think the fact that so when I came to Singapore, I wasn't aware about some of the regulations, and then we had to learn on the job. And I'm happy I wasn't aware.
Right.
Naivete is something good when you're starting a company. Like if you knew as much as you know after a few years, you probably would have never started the company, and that's a good example. So yes, to confirm, in Singapore by law, the lending is online up to the point of the final signing of the documents. Basically, the KYC has to happen in branch at the lender's branch. So when we realized that, and we're an online platform, so we realized we have to build around this. So I remember reaching out to our lenders and saying, okay, so where is your appointment booking system? What do I connect to? And they're like, we don't have an appointment booking system. So then I realized, okay, I have to build it for them. So we build solutions for them. So customers come to our platform, they go through the whole process, and the final step, we book an appointment, or the customer books an appointment on our platform, and they go down and sign the loan. This is a story of, I think it's a good story because on one end, that's the reality. And we can smile about that and say, oh, that's interesting that it hasn't become fully online. It works because it's a small country. People can actually go to a branch. But on the other hand, Ministry of Law, who's the regulator of lenders in Singapore, 2 years ago, we started working with them on building a prototype for online lending. So now all of a sudden, a startup like us, and think a foreign startup, gets the opportunity to work with the regulator to build a prototype to solve this problem. And we did that back in last year. We built it over 6 months. We got paid for it. And that relationship, to be able to have that kind of close relationship with the regulator and the government, I haven't seen that anywhere else. That would never happen in Sweden, that a startup would just get access and sit down with the regulator and then build it together. So it's a tale of like two stories of the same city, a tale of two cities, or whatever the term is. And that tells you like how Singapore, the pragmatic approach they can take at the same time as, sure, there are some legacy solutions in place that over time will be changed.
Incredible. So you touched on there that, in hindsight, had you known of the challenges that might have been, that were prevalent, you might not have chosen Singapore. But what made you choose Singapore in the first place?
It was in many ways the same reasons we choose all our markets. We look for developed markets where lending is mature. There is a rule of law, regulations are in place, and there is a digital form. Of course, in Singapore we were a little bit wrong, but digital lending is prevalent and used. We look for markets where there's a variety of lenders. So if we go to a market that only has 3 lenders, we're not really adding much value, right? Because you can just do it yourself. So we look for markets that have a variety of lenders that are all looking to acquire customers. And obviously where there's a demand for loans, and it's I think I keep coming back to developed markets because it just summarizes the whole thing. Like, for example, there's credit bureaus, there's KYC, you can actually identify a customer. The reason I'm saying this is because some of the options I had were markets like Vietnam or Philippines or Indonesia, where you can literally just disappear. You can take a loan and just go to your village and we can't find you, or the lender can't find you. Those are not markets that we approach.
Right. And, huge opportunities nonetheless in Southeast Asia, but there's challenges, right? And I think this is what's often overlooked is, they look at the number of smartphones oftentimes and get all excited, but then there's cultural differences and behaviors that are ingrained in the society. It's really interesting to hear you say that, because I think oftentimes, founders can get super excited by the kind of headline opportunity. And then when you get in there, as you experienced with Singapore, there's some challenges that, you just never factored in.
Yeah, no, exactly. And I think you're touching on, it's almost a completely different topic, but there's a lot of startups like us, and we come to a market and we set up shop, and especially Southeast Asia, and we think, okay, we succeeded in this market, now we're going to go to the next one, thinking it's like a copy paste. And that's never the case. It's night and day. Each market has its own peculiarities and behaviors, especially in these developed versus developing markets in Southeast Asia. And I'm very humble about the fact that I'm a Swede that moved to Singapore that's launching a business in Australia now. So we're very well aware of that. There's a lot of things I don't understand here. Some I use to my advantage. I come with an open mind, and I'm not caught up in the legacy or history, but I also know I need a strong team behind me, local team that understands the local nuances.
So we're doing this the week of you launching here in Oz, official launch. How has that gone?
very exciting, very surprising response. So, when I launched Singapore, Hong Kong, we had a lot of pushback from lenders and banks in the early days. Basically, we were told time and time again, this is not going to work because we require a two-way partnership. We're not a lead generator. We're not just sending leads to lenders. We require them to send data back to us. And we were told they can't do that. They had never done that before. It took a long while to get the first lenders to try us out. And now we're at a good place where lenders approach us instead of us approaching them. So coming to Australia, I was expecting the same, but that was not the case. And in hindsight, of course, lenders and banks here are used to working with partners. They're used to working with brokers, aggregators in different ways. So there is an open-mindedness to partnership. So that was very cool to see how quickly we could onboard our first lenders. And then, of course, the other side of the business is the demand side, the customer acquisition. I was worried about that as well. Again, in Singapore, Hong Kong, there was a lot of hesitation. We saw a lot of traffic coming to our website and not converting to applications. So I was ready for that, or we were ready for high acquisition costs. We've been very surprised how we already have hundreds of applications. We basically had to shut down our marketing yesterday or pause it to just catch up with all the applications that we got. So I'm very excited.
Wow.
It's very early. And look, in 6 months, I might come back and say it was really, really hard and I was wrong. But it looks like we have a good start. So,
What do you put the good start down to? Because B2C is very, very difficult in fintech in Australia.
Yes. I don't. This doesn't mean that much. The fact that the lender side, I'm very happy about. That tells me that we're gonna be able to partner with lenders. This is a good sign. I don't think it's a temporary signal. It's gonna be a lot easier to work with lenders here because they're much more advanced. The B2C side is gonna be a struggle. We've done it a few times already. I launched 5 markets in the Nordics and I launched 4 markets in Southeast Asia, shut down 2 of them. But we have a playbook on how to enter a market and how to slowly establish ourselves and build a brand. But it's a painful and expensive journey.
What were your kind of motivations or reasonings for closing businesses down? Because that's a really difficult decision to make as well.
Yeah, that was the most difficult decision. That was during COVID. So when COVID hit, we were still an early startup. We had just launched 4 markets in 2019, Singapore, Malaysia, Thailand, and Hong Kong. And I had teams in each market, they were not teams, they were family. Like we were just, in the early days, we're all fighting in a war, it feels like. And then COVID hits and, the world was going under and investors were telling us, you need to lower your burn. You need to do everything you can. And I made the decision to shut down Malaysia and Thailand. It was COVID almost maybe was an excuse to accelerate that decision. In hindsight, it was never the right markets for us for the reasons I mentioned earlier. And Malaysia and Thailand are not considered developing markets. They're somewhere in between. But even in those markets, we could see the struggles. So the reasons were that they were just simply not mature enough for our model.
Is Lendela your first startup as a founder?
Yes, it is.
So I guess, it's a very different experience having your own business than to working for someone else and make mistakes with other people's money. OPM, I like to call it. What have you learned about yourself on this journey?
Oh my God. Sometimes I wish I'll have some time to slow down and reflect on that. I was very reluctant to be a CEO. I'm a product background. I have and so I hired a CEO from day one. When I moved to Singapore, I hired a local CEO to help me build this. So that obviously didn't work out, hence why I'm sitting here. And that was one of the learnings. I had to learn to become a CEO, what does that mean is the real question. I think what I learned is I care deeply about working with people. I did not think that. I thought I was, I'm a product guy. I want to be in front of the computer and build, solutions. I really care deeply about working with people and having people that I care about around me. That's one thing. I learned how much work it takes to build a company and how many things you have to do that no one really knows, how much pain you have to go through. You just hear about the successes, right? You just hear thanks to you, I think we get to hear about startups as they're developing. But before this, we just hear about the successful companies and not all the blood, sweat, and tears. And now I understand. And how many fail? And we never get to hear their stories. And so I have a much more appreciation for running a company, of course.
Yeah,
doing it myself.
What would be your advice to first-time founders?
One thing that immediately comes to mind is that not all startups are VC startups.
Right.
Don't just assume you need VC money. Going the VC route is a very special route, right? That it requires, there's expectations on you, there's growth expectations, and not all startups, not all ideas are suitable for that. They might be suffocated by that, but they might be a great idea.
Yeah.
But they might need time, or is it patient capital, or maybe no capital. That's something I think I was lucky that I wasn't aware of that. So we got VC funding from day one. And I'm lucky that we figured it out and we managed to pivot our product during the first years where we couldn't. We're in Singapore, Hong Kong, when we were trying to localize it. But I can see how that could have been a detriment. Yeah.
It's interesting you mentioned that, Nima, because something I've been pretty passionate about trying to get across on the podcast, here in Oz, I think, because it's still a fairly immature market. A lot of the focus has been on VC as being the startup kind of industry here in Oz, and it's not, right? There's so many, as you've said, there's so many other ways paths you can take to making a successful business, and not every business is going to be a unicorn. That doesn't mean that it's not successful, and particularly in markets of this size, right? You can't just take what's happened in the US and go, there's the blueprint, this is what we're going to apply to our market, which is a fraction of the size.
Completely agree. I think it's I mean, what's happened the last year with the change in the market, I think it's the best thing that's happened to us. That this pressure, this unsustainable growth, just pouring money down the hole, and then it I think that's been very bad for the industry, and I think that it's actually really good. And it's painful as a founder to see your valuation drop or have a hard time raising funds. But I'm super happy about what I'm seeing. It's making us all slow down and reflect on our models and what are we actually building, and how is this actually what is our job? To generate value for shareholders. Profits is our job. How are we going to get there? I think those discussions are very good.
I've got and this isn't something I came up with, somebody shared this with me, but their definition of an entrepreneur is somebody who solves problems for a profit. And I think we have lost sight of that. And for me, I've always felt that innovation has been a byproduct of entrepreneurship, not the other way around. And I think we perhaps lost sight of that in the last decade and went all in on kind of innovation and growth, and not really focused enough on, even if we're solving a problem, how are we going to sustain it and make it into a profitable business? Yeah, fantastic. So kind of talking a little bit more about the, I guess, the Australian launch. So you've kind of now official there. What types of clients are you targeting? Who are you typically your customers on? First of all, the finance side and the lending side.
As you identified, we have two types of customers, right? On the finance side, we at launch, it's a little bit of our playbook. We target the non-bank lenders at first. Eventually, we want maybe one or two banks to join the platform as well. But our goal is to have a wide variety of lenders on our platform. So no matter who you are on the other side, a borrower side, we will be able to find you at least a few offers, a few lenders willing to take you in as a customer. So the variety of lenders is key for us. And that's how we start in the early days. And Jake, our country manager, is doing a great job at that. He's already onboarded not just quite a few lenders, but also that exact variety of lenders.
Yeah. I guess one of the kind of challenges in this type of economic period, for businesses is, how do we increase revenue? And in the past, it's been pretty difficult to look at additional revenue streams that can actually produce outcomes in a short period of time. And it's oftentimes actually, been encumbered with a lot of upfront cost and risk. So I'm thinking, predominantly things like white label products, and partnerships that can take 2 years to kind of get some, just to get the product ready. What kind of speed to kind of onboarding customers can you get with Lendela? And if you're a financial services business, it's like, hey, we need to increase revenue. We got to increase our distribution and find other distribution channels. What's that kind of time of having a conversation with them to then being live on the platform?
That's a good question. I'll share a little about Singapore, Hong Kong, because that's where we've had most of our progress so far. So in the early days, when I met the lenders, I was trying to get access to their APIs, and the first conversations were like, what's an API?
Yeah.
So I realized, okay, can I talk to your tech team? So like, no, we don't have any tech team. So this is what we have to maneuver around. So we built a portal for our lenders. We built solutions for our lenders. And these solutions have now brought us to a point where we onboard a lender within 24 hours. We can talk to a lender as soon as we agree on the terms and sign the contract. We can have them onboarded by the end of the next day, and they can have receiving customers by the end of that day.
Yeah.
And that's really cool to see, obviously. This is mostly applying to non-bank lenders. And on the bank side, of course, it's a completely different journey. It's a month of conversations and different meetings and maneuvering an organization, understanding who's actually the decision maker.
Yeah.
So that's a different story altogether. If a lender has an API, then usually within 2 to 3 weeks, we've been able to launch. Over the years, including my Nordic experience, I've built over 250 APIs. So we're very comfortable using our partners' APIs. We don't have like our own solution. We don't offer only our own solution, but we take what they have and adapt to that. So flexibility is key for us. So quite the short answer is quite quickly, I would say. It doesn't take that long for us to onboard a partner.
And there's no cost as well. So the cost only comes if you get if you do a
disbursement.
Deal.
Yeah.
Right.
So that's also one of the things I've noticed over the years. Our partners really appreciate that we aligned our goals with our partner. I use the word partner, and it's not just a gimmick. We truly call it partnerships. Our agreements are called partnership agreements. Our meetings are called partnership meetings. Yeah. Internally, we call it partners. We mean that in every sense of the word. And one of the ways we align is through this. It's success-based commission. So,
well, I think one of the ways in which you and I connected was, we talked originally about me helping you launch here in Oz, and I think we just had shared values. And you said something earlier around win-win-win, and that's exactly the same philosophy that I've got in my business. And it's very, very difficult to get right. And I look at my kind of competition in recruitment, and I think one of the reasons why they struggle is that you kind of for a win-win-win, you have to be absolutely transparent. You have to wear risk. You have to take on, and you have to be prepared to walk away from things that aren't right as well. And I think, unfortunately, there's too many businesses, whether it's recruitment or any other industry, that aren't prepared to walk away, and kind of admit that, hey, we're not the right partners in this instance.
I agree with you, but I also disagree. It's not that hard in a way. It's just, you just need to accept the concept of maximizing your win at the expense of the other party's loss. I'll give you an example. So in some of our markets, in Hong Kong mainly, actually, the banks are very used to paying per application. And they pay quite a hefty sum for a loan application, not a disbursement.
Right.
So it's very tempting for us to say, okay, let's do that. We get paid per application, right? But we insisted, no, we want to get paid per disbursement because we want to align with you all the way to the end. Because we might be sending you 100 loan applications. If they're not getting a loan, then it's just a loss for you. But they're used to doing that because of how the market's been structured. And that's us sacrificing, because we make less money by doing so. Yeah. Because the disbursement is harder. There's rejections and there's drop-offs and all that in between application and disbursement. So, but we still do it. And so it's not a hard decision, but it costs more. And that's what makes it hard, because you want to maximize your profits.
I remember this would be going back maybe almost a decade now, but one of my clients who's a life insurer was telling me that in Australia, the term life insurance is the most expensive in Google AdWords in any country in the world. And I think it was similar for credit cards as well. customer acquisition, and Google AdWords where you're paying per click. I've had this conversation many times that getting somebody to click on something and download an app versus getting them to kind of fulfill a loan and, completed. That's a very different cost, right? And, even though, Google AdWords is very expensive, there's a whole host more things have to happen after that click to get that conversion. How have you been able to kind of articulate the value proposition of Lendela to show that, hey, look, you're kind of, you're taking a lot of risk by going this traditional, well, I say traditional, it's not that it's only about 15, 20 years. How do you kind of get that across?
Yeah, it's a very good analysis and what you identified about the Google cost. And it tells you two things, actually. It tells you, one, customer acquisition is incredibly expensive in this industry. Insurance and lending are usually top two anywhere in the world if you look at Google. Number two, it tells you someone is still making money because it's an auction. So someone is still willing to pay $50 for a click, $100 for a click for a reason. They're still making. So it tells you two very interesting things, I would say. To answer your question, the good news is that our own partners, lenders and banks, they have done it. They know the pain because they have been on Google. They have been on Facebook or TikTok or and run campaigns in subway stations or whatever it might be. So they're very well aware of their customer acquisition cost. If they weren't, then yes, they would maybe be like, oh, why is it so expensive? But they're very well aware, and if we can give them a better solution, then it's an easy calculation for them.
So we're kind of coming to the final part of the interview, which is, you very kindly showed me around Singapore when I was there, and give me some really good insights into the market. What's your perception of Australia, having been here for the last week or so?
I really love coming here. I have to say, I know it's coming from the Nordic markets, Europe. It feels a lot more like home when I come here. I love the weather, which some people would say, "Are you crazy?" But this is the best weather. I can walk around without sweating and go for a brisk walk. But I love the culture, the openness, the way people are open to interact, people are open to talk. What I've seen Jake achieve now with the first partners and how open they are to partner with us and help us succeed. I think these first partners that are joining us, they know we're just starting. They know we're going to mess up for a few months before we can deliver any real value, and they're still willing to work with us to do that. That means a lot to me. I think it's a great place to live. On a personal level, I think life quality here seems very high, and work-life balance seems pretty good as well. So in general, I'm very impressed. Yeah,
and in terms of the kind of fintech scene here, have you been able to get a sense check as to what it's like here?
A little bit. I'm the kind of founder, I kind of just keep my head down and do my thing and don't really barely read the news or anything like that. But one thing I have noticed is, so I came here first time at Intersect in September, right? And Singapore Fintech Festival, considered the world's biggest, I think.
It's huge, right?
I'll challenge you to do one thing. Look at their agenda and see if you see a single conversation, topic, speech, panel, fireside chat about lending, specifically consumer lending. It just doesn't exist. So lending is not considered fintech from at least Singapore and Hong Kong. It's not much talk about that. So, but I was at Intersect and I was looking at the agenda, and there were multiple meetings happening at parallel that I wanted to join. And I had to choose between multiple. I love that the idea that it's an open conversation here, that we're actually looking at the problems, trying to solve these problems. Because the fact that we're not talking about it is the problem. And when we talk about it, like anything, whether it's mental health or anything else, that gives me a lot of hope.
I think the world's about to find out pretty soon that credit makes the world go round.
I think so too.
Yeah. So your journey as a founder, kind of wrapping up, Nima. Are there any places that you go for inspiration? The podcasts that they listen to. Do you have any kind of hacks around kind of mental health? Those types of things.
No, please send me your ideas. No, seriously, I need to disconnect. from work. So the best way to disconnect nowadays is to be with my daughter, my 2-year-old, and that's the only time I completely I would say I can be completely present.
Yeah.
Back in Sweden, I flew. I have a pilot license, and I flew a lot, and that was the only time I could completely disconnect, because you're so focused on what you're doing. It's life and death. You can't not think about. You can't think about anything else. That I can't do in Singapore. So my daughter has become that substitute, I would say. In terms of podcasts, I generally try to, other than your podcast that I can recommend, I generally try to listen to completely different topics.
Yeah.
I do have one, the All In podcast, which is cool. And then I listened to another one with Sam Harris, the Making Sense podcast. And these are completely different in a way, but what they have in common is they bring people in with very opposing views.
Right.
Which is something we really lack in this day and age. So I get really excited when I see people with very opposing views, especially in the US. And even the hosts, there's a Republican and Democrat and very opposing views, and they work together and they talk and they can communicate with each other. Yeah. Sam Harris does similar things, and that I really like listening to those podcasts.
Awesome. Well, Nima, it's been fantastic to have you on the show. Look, I mean, first of all, we get lots of financial services executives, lending fintechs listening to this show. If anybody's potentially interested in working with Lendela, what's the best way for them to reach out?
And LinkedIn is, I hope you can easily find us on LinkedIn. Me, Nima Karimi, and Jake Osborne, our country manager. We're both very happy to meet. I love interacting with people. And then I think that's maybe the easiest way.
Right.
I can share my contact details if it's possible.
Yeah, we'll put that in the show notes. Yeah. And we also get awesome talent listening to this show as well. If anybody's interested in potentially joining the Lendela journey, what's the best way for them to find out about potential careers with the business?
Yes, we will be hiring for sure. So obviously on LinkedIn, we put all our ads, but I would say don't even wait for that. Reach out to me or Jake. And we'll have a coffee with you guys.
Awesome. Well, enjoy your trip. Congrats and good luck with the launch in Oz. And thanks so much for joining me, Nima.
Thanks for having me.
And you can connect with me, folks, on LinkedIn and Twitter. If you're new to the show, make sure you give us a follow and a review, because it really helps me in not only promoting great guests like Nima, but also getting great guests like Nima onto the show as well. If you're coming back, thanks so much for your support. You have no idea how much it means to me, the feedback that I get from people who listen to the show. Until the next episode, keep well. Fintech Chatter is presented by Tier 1 People, leaders in fintech executive search. We'll help you find world-class fintech leadership talent to build world-class fintech ventures. And you can find out more at tier1people.com.